Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and impact. I'm Govindraj, Ethiraj. Two big stories this week. First up, doing business in India is set to become easier with the Rajya Sabha clearing as many as 16 amendments to the Companies Act of 2013. So will this really change lives on the ground? That's the question we're going to put to Mitil Chokshi, international tax expert, and Samir, Sanghvi, managing partner at Manish Modi Associates. Coming up after that, we ask the big question, where is the rupee headed? We are joined on that discussion by Sujan, Hajra, chief economist at Anand, Rathi, and K&A senior advisor at Mecklai Financials. Doing business in India is set to become simpler with the Rajya Sabha clearing as many as 16 amendments to the Companies Act of 2013. With this, the amendment bill is through Parliament, doing away with a minimum paid up share capital and some stringent provisions against Ponzi schemes are some of the main features. Here's a report.
The Companies Amendment Bill 2014 passed by a voice vote in the upper house. The new bill carries 16 amendments to the original legislation, all designed to ease corporate woes on carrying out business activity in India. Members criticized the stringent provisions of the 2013 bill, demanding continuous updating of the law.
Industrial houses, they are quitting this country. So what are we doing? I am sorry to say, I fail to understand how this 2013 Companies Bill was passed, although we were a party, and I feel sorry for that.
करीब 16 amendments लेके आए, इसको 16 छोड़ करके तो कई 16 होंगे. एक बार ये amendment ला करके नहीं चलेगा, 2-3 बार ला करके इसको refine करना जरूरी हो गया है.
The amended law does away with minimum paid-up share capital. The need to have a common company seal becomes optional. There is to be no more public inspection of the broad resolution filed with the Registrar of Companies, as it may lead to breach of trade secrets. Fourthly, the new legislation enables the provision to decide a threshold limit for reporting of fraud by the auditor to the central government. Approving related party transactions becomes easier, and it provides for a fine of up to 10 crore rupees for unauthorized collection of deposits from the public. Finance Minister Arun Jaitley assured that bail provisions too have been made less stringent.
This is an onerous provision, so except in very serious cases of fraud, I have amended that provision, and the normal provisions under the CRPC will apply as far as bail is concerned.
A committee of stakeholders would be set up to review issues and problems faced in implementation of the new law. Jaitley also conceded that a need might arise to amend the company's law in the future too.
Continue to go into this whole question for the next few months,
given the breadth of this diverse legislation. Krishnanand Tripathi's report for Rajya Sabha TV.
Well, that was a report from Krishnanand Tripathi. Joining me now here in the studio, Mitil Chokshi, international tax expert, Samir Sanghvi, managing partner at Manish Modi Associates. Gentlemen, thank you very much for joining us. So, first question, let me begin with you, Mitil. How much of these amendments, and they appear, of course, significant, but are really going forward in terms of forward-looking amendments and legislations, and how much of it is really cleaning up what had to be cleaned up perhaps a long time ago?
Govind, in context of the amendments, I think the draconian provisions were 185, 188, 189.
Okay.
188, 189 were related party transactions, required special resolutions, and the special resolution, which is more than 75% of the voting power, and in a holding subsidiary situation where the balance 25% of the voters or the balance 49% of the voters, of which you have to find out 75% who will agree on your resolution, became a big challenge. This was a challenge,
sort of a logistical challenge of getting everyone on board before you actually could do something.
Absolutely.
Okay?
And to add to which, this challenge led to a complete set of cumbersome procedures for the purpose of getting this approval, and particularly, you have power infrastructure where there are multiple SPVs. Today companies have infrastructure have 100, 200, 500 SPVs. Now each of the SPV to get an approval was virtually impossible and very cumbersome.
Right. So you're saying that the value of what has been unlocked here is much greater than the number that we may think so.
Absolutely. Okay. So in terms of numbers, yes, maybe they may be less, but in value, this is fantastic.
Okay. So some of the other amendments, let me come to you, Samir, are to do with winding up of the company, board resolutions, bail provisions, unclaimed dividends. What do you place the most importance on?
Board resolution is a very important amendment, because earlier whatever I am deciding in the board meetings regarding the new products, new launch, everything was supposed to be e-filed, and my rivals, my means shareholders or the stakeholder or any person for that reason can take the copies of that from the public inspection.
Right.
Now it is done away with, and
so trade secrets and so on will be protected.
But government has made a very smart move here. They have done away with the public inspection, but they have not done away with the filing. So now real-time basis filing is must.
Okay.
So that is the very good move and smart move government has taken. And second thing is that first time government has differentiated in this new Companies Act the differential treatment for the fraud cases, special fraud cases, and others.
Okay.
Now, normal cases can be tried under the criminal procedure code, and special fraud cases will be tried under special code. And government is also trying to bring out the more and more special codes in the more and more cities so that the speedy disposals of the case take place.
Right. Okay, Mitil, so if we were to take a larger impact, so you talked about infrastructure companies, SPVs being one beneficiary. What's the larger benefit here? What, for instance, will life become simpler for smaller companies or smaller enterprises?
Some instances are there. For example, doing away with a certificate of commencement of business for private limited companies, doing away with this, you know, seal versus stamp. Now you don't need to have a seal. I mean, this is something which you don't need anymore as a private company. You just have a stamp, which practically was followed. So the steps are in the right direction. But then what we would have liked to see is, why do we need to have 4 board meetings for a private company? Why do you need to have, you know, why can't it be done internationally? You have 1 or 2 meetings in a year. I mean, why create so much of documentation for private limited companies up to a certain size?
Okay.
So threshold based, they should make threshold based applicability.
Right. So you're saying therefore that smaller companies will still be affected because of the logistical effort that goes into doing all of this. Big companies in any case know how to manage this.
Absolutely. And only people like us and consultants make money.
Okay, fair enough. That's always the case.
One thing I would like to add here is that for private limited company earlier there was exemptions, benefits about they could take loan from the shareholders, members, their relatives. Now it is not under New Companies Act, and
how does that affect?
That will affect, sir, because today most of the private limited companies are run by the SMEs and they have to manage their funds from their own internal sources. They don't take public money at large. So for them also these provisions, if they are added and made more strict, then suffocating environment is getting created.
Okay.
So that is something has to be taken care of. And second thing, they even cannot grant loans to their group concerns because of the common directorship issue. And section 185 is one of the draconian sections which was introduced, but now with this baby step which is taken by government, we feel so we professional feels that 185 will be relaxed. For private limiteds.
Right. So, Mitil, you talked about internationally accepted norms. So, what are the other key points of variation today between what we are seeing here in our Companies Act and what is internationally accepted?
Now, essentially, internationally, you know, what we come across is you come across the one shareholder companies which is there in India now, which is a welcome move. You don't have this certificate of commencement of business, which is now done away with. You don't have a minimum threshold of capital. Now in India, we used to have a minimum threshold capital of 1 lakh, which 1 lakh has been done away with. You don't have these minimum
So, but that's good for small companies or startups.
That's very good for startups and small companies. You don't need to have, so you don't have the baggage of registration and stamp duty costs, which were incurred. So internationally, you don't have all these costs. I mean, you just want people to plug and play.
Okay. So, just to take a step back again, if you were to look at all these amendments, who is it benefiting the most? So, or rather, let me put it this way, can it be said that this really benefits smaller companies, startups and that kind of universe?
I would say
more than maybe others?
No, I would say, I mean, frankly, if you ask me, I would say that the effort is fantastic, you know, of the current, you know, government in terms of trying to go in that direction. Yes, always, you know, something will evolve as we go on, and as we take, you know, steps more and more, it will evolve. But you know, doing away with simplification and trying to thrust in startups, smaller companies, push in, allowing them, you know, loans to their associated concerns, related parties, and for the very large cap who are facing cumbersome web of procedures, trying to mitigate that. At the same time, strengthening your frauds, serious frauds, non-bailable activity, which is fine, I think.
But you also said that basically a lot of these things never existed internationally in any case. So we are really coming on par now rather than going.
We are heading in that direction. Maybe we have miles to cover before we sleep, but
Yeah. So let me ask you about that. So if you were to identify or spot the 2 or 3 things where we still have a way to go, or rather, let me put it this way: what's the unfinished agenda now?
Unfinished agenda, again, as was referred by Samir, and one was ease of moving funds from private limited companies from one company to another, particularly when they are of a particular threshold, because they have to be able to move funds here and there. I mean, people don't have to presume that they will be used for malified intentions, so-called entries or bogus transactions. Let's get that picture out of the mind for all of us, and let's say that today the people want this movement.
So this, okay, so let me ask a quick question before we move on that point. So does this also reflect a certain degree of trust, or an improved degree of trust? Because that's always a problem when it comes to law, right? No, I mean, it always believes that the exception is the rule and not the other way around.
Absolutely. So now, again, the mindset is changing. Okay. So great. Then MGT 14, yes, the confidentiality, respecting confidentiality is very good in terms of, because everybody could have everything just by going online.
So to come back to unfinished agenda.
Yeah. And to come back to unfinished agenda, therefore, internationally, again, ease of moving funds, simple registration process, very low registration costs, very low maintenance costs. Today you want low maintenance costs. Today you can just go to Singapore, Hong Kong, you have $1,000, $2,000, $2,000, just set up companies. Dubai, you can set up in $7,000, $8,000. Yes, let's replace all of these. Let's compete with the international marketplace. Get all this business into Mumbai. I mean, I'm passionate about Mumbai, but actually into India. So let's get all this business into India.
Yeah. So, bro, but that also, I mean, when you talked about Dubai and Singapore and so on, but that also could be for tax reasons, right? I mean,
one is tax, but the other is also ease of, it's
funds flowing back and forth in an international context.
Ease of FDI, ease of, again, convertibility is not there, full convertibility, so I'm not going to touch that issue. But essentially, ease of fund flow costs, running costs. We don't want running costs.
Okay. Samir?
Yeah. Same here. And second thing, I would like to add one more thing. That government has already taken another initiatives under the different laws like income tax, the transfer pricing law, FEMA, to curb all these malpractice. So now it is more important that we start breathing and things will automatically take care. Check and measure balance always will take place.
Okay. No, so I mean, that's an important point, because finally as a company I'm hit by all these things, whether it's FEMA, whether it's income tax, transfer pricing, when even small companies face that. So if we were to look at the ease of business aspect that's come here, but if we were to look at, let's say, what we are facing on transfer pricing and so on, are things becoming better?
Will become.
The package?
It will become.
Okay.
Because the consolidated approach of the government is towards ease of doing business. Okay. And you can see in this presentation also, our finance minister said that this is the beginning, this is not the end of amendments. So that also indicates or gives the feeling that government is keen on changing things if they are not working in line with the industry norms.
Right. In any case, he said that he wants to set up a committee and they will,
and that will be also headed by or represented by the professionals and the industry people. So their actual problems will come out.
Right.
And that will be resolved.
Right, yeah.
There are one or two very important matters which I feel need to be addressed. One is the financial year. Today we are a global player. India is a global player, and we need to have 31st December as the year ending, which was changed in the Companies Act 2013 to 31st March. I think it should be all synchronized to 31st December.
But you have the option of doing it, right?
No, not anymore.
Okay.
Not post Companies Act 2013.
Okay.
And therefore, not only small companies, subsidiaries of foreign companies, JVs, I think we have to look at marketplace. They want to integrate their accounts. It's so much of a challenge. So 31st December, year end should be integrated all across. I mean, that
but is that something that everyone will agree with you on, Mitil?
I mean, even income tax has to agree on that. Whereas whilst I'm talking of this, on the other side, you have income tax disclosure standards, you have accounting standards, and we also have IFRS coming in 2016. So whilst everybody will be grappling with all these three, again, there should be an integration of all of this and threshold based.
Okay. So let's, I mean, as we come to a close, so let's ask the fundamental question, right? This is all supposed to be about ease of doing business, right? Ease of doing business, particularly, I mean, not to exclude the large companies, but particularly for small companies, medium companies, the sort of what really keeps the fire burning, as they say. Does this address that concern, Mitil?
30%.
Okay.
70% still to go in terms of ease.
So, okay. So I'm going to come back on the 70%. Samir?
Yeah, 50-50.
Okay.
because sir, our one side we are saying make in India. We are inviting entrepreneurs to come, they will also grow. So by the time these relaxations and everything will come, definitely things will improve.
Okay.
So I think 50-50 chance right now, but things are on the right direction now. So that has already started.
So that's the good news.
That's the good news.
So what is that 70%, Mitil?
Fund flow, integration with the fund flow within companies, small companies, integration within and as a part of the world economy, thinking that today, yes, our companies are global. What are requirements of a global benchmarking?
Right.
I mean, that's where we need to be heading.
Right. Okay. Samir, and the 50%?
Same.
Okay, roughly the same issues. Okay.
Roughly the same issues.
Right. So clearly a lot needs to be done when it comes to ease of doing business, but some of the steps that have been taken with these amendments are a step in the right direction, is what I'm hearing from you.
Because one thing is, sorry to interrupt, but one thing is that even a fraud reporting by the auditors is also relaxed to some extent. So now, for every small violation, I need not worry. So government has already taken some of the initiatives. Even the consolidated financial statement need not be required to be approved by shareholder if they have already approved the standalone financials. So all these steps are procedural, but at the same time, it will have massive impact as already discussed.
And then there is more to come, and the government seems to have already hinted in that direction.
Right.
Gentlemen, we run out of time. Thank you so much. Well, we need to go in for a break. On the other side of Policy Watch, the question we are asking is, where is the rupee going? Stay with us. The Indian rupee hovered around 64 to a dollar this week, its weakest in 20 months. Concerns over tax demands from foreign investors led to its selling pressures in the stock market, coupled with a surge in global crude oil prices. This leading to a sharp depreciation of the rupee against the dollar. Now, this was compounded by concerns over a delay in tax reforms like the goods and services tax. The government has tried to allay fears of foreign portfolio investors over demands raised by the income tax department, but this hasn't really stopped them from selling and continuing to sell their holdings in India. Data suggests that foreign institutional investors have been net sellers this month in both debt and equity markets, almost 1.6 billion since April alone. Over the weekend, the rupee, however, recovered slightly thanks to selling of the greenback by banks and exporters. Part of the recovery is credited to weakness of the dollar against major currencies, which in turn is credited to disappointing retail sales data in the United States. Well, joining me now are K&A Senior Advisor at Mecklai Financials and Sujan, Hajra, Chief Economist at Anand, Rathi. Gentlemen, thank you very much for joining us. So, we are in an interesting situation. The rupee has hit a 20-month low last week and is hovering around the 64 mark. The question that we are trying to obviously ask is this something that's going to continue? Is it a fundamental sign of macroeconomic weakness, or is this something that we should not be worried about? Let me begin with you, K&A. What's your sense? Why is the rupee going where it is?
I think it rupee weakened for last 2 to 3 weeks from 62.50 to 64.20, which was about a day before yesterday. I think we all know there was a huge IPO about $170 billion approximately, which ended last Tuesday in China. So across the globe there was a sell-off in the bonds. Yields had gone up and money was shifted to China. So in India also there was sell-off in the bond market, and some money must have moved out to China. But now after that episode, the rupee has stabilized down, and today it's trading around 63.55-56. I mostly believe normally in the month of May, historically the rupee has weakened for last 15 years. But this time also I think 2 or 3% weakness was always there. The way for last 18 months our present governor has controlled it very well. From 61.30 I think was the strongest point, and 64.20, which is approximately 4 to 5% weakness in 18 months, I think, which is very healthy. I don't see any panic in the market coming out.
Let me put the question differently to you, Sujan. So, this was not expected. While, I mean, we're not expecting a very strong rupee either, though there was a sense that this government was trying to direct the rupee to a higher level from against a dollar. Does this reflect something more fundamentally, something that we should be fundamentally concerned about?
I won't say really concerned, but what you have to understand is that ultimately the movement of rupee, the economic factor which impacts the most is your capital flows. And if you look at the capital flow data, and as Mr. Dey was also pointing out, that there has been some amount of withdrawal, particularly in the debt side of it.
Right.
So obviously it's the on the movement on the capital account side which has impacted. But having said that, our sense is that India still remains a one of the best growth stories. So in terms of capital flows, whether it's particularly the portfolio flows, we are not much concerned that this is a permanent thing. But I think the real concern actually is more on the trade side. If you see, exports have done very badly during FY15, and but for serious contraction in oil imports and gold imports, the trade deficit could have been significantly higher than the 150 billion ballpark number. So if there is any concern, it's more on the current account side rather than on the capital account side.
So, you know, our feeling so far has been that while things may not have really moved on the domestic front, there has been some factors on the external front, including falling oil prices, which were sort of giving us a healthy tailwind. Maybe arguably on the domestic front, it could be inflation as well. Now, where does this kind of contribute? Does this mean that things are like going to shake up a little bit?
No, so far as see the bigger story, if you particularly look at growth, if you look at inflation, if you look at fiscal balance, all these major parameters, major domestic parameters are basically on track.
Okay.
So and in fact, if you look at the inflation, particularly the WPI kind of inflation, which is in deflation for a prolonged period, which you haven't seen, and yesterday's data showed that all parts of the index has gone into a deflation.
Right.
So given that, what do you think is that we don't have a major internal macroeconomic worry as of now. The major thing is more on the sentiment side rather than the actual side.
Right. So, Mr. Day, so one part is of course to do with capital flows. Foreign institutional investors have been edgy in the last few weeks. They're concerned about certain tax issues. They've been selling. Maybe they're selling for other reasons as well, including the ones you point out. But if you were to separate the internal and the external stimuli when it comes to the rupee, what at this point is playing a larger role?
Well, in this month, if I see the FII data, which normally the first 4 months of this calendar year, there were positive flows about around $2 billion a month, approximately. This month, in the month of May, we have seen a net outflow of nearly, as of date, close to $1.6 billion, which is a negative for the rupee to go. But I think this could be a temporary. And honestly, I don't feel much of capital flows may go out from here, because Indian bonds still attract better yield. At the same time, there is also a limit in where the FIIs can invest in the government securities, and the limit hasn't been gone up yet, which is, I think, more or less it's been completed. But on this flow side, I don't think much can be added, because a little bit of outflow is always to be discounted.
Okay, so that's one part of the equation, and that may or may not get resolved depending on a bunch of things. What about the other factors that are influencing, let's say, the rupee or the dollar for that matter? If the dollar continues to get stronger, or it may not be going in that direction at this moment, but if it gets stronger, then we're going to get impacted, aren't we?
Exactly. See, Govind, what I feel is that if you take rupee was overvalued about 2-3 weeks back, about 14 to 15% based on trade weighted. But the dollar index having come down from 99.80 to sub 94, which is approximately 5.5%, and rupee having depreciated in last 2 to 3 weeks by 2%. So I feel today is the real today the rupee is overvalued by around 6 to 7%, and if I keep a 5% tolerance level, there's a possibility rupee can still fall about 2.5% in next 1.5 months. But otherwise, looking at the international dollar, I don't think US may hike the rate so soon. Maybe the rate hike may come somewhere in the last quarter of this calendar year. So dollar index, though, which had gone up to close to 100, but again to go close to 100 may not be so soon. So even if dollar goes strong going ahead, I don't see much. Rupee rate will purely depend upon how flows come in and go out.
Can you explain for our viewers, when you say it's overvalued, you're obviously using a benchmark. What is this benchmark that you're using, and how are you computing it?
These are based on the data which is being published, a real effective exchange rate based on that. But honestly, these are all analytical views. If you go to practically do it, it's not possible. It's not easy. But based on the base year of 2005, the rates are being calculated. Normally, we track the dollar index vis-a-vis the dollar rupee happening in Indian market. But if I say the other side also, means the fall of the rupee will definitely determine if there is a huge outflow. At the same time, we should also know that today our trade reserves is only around $350 billion. In fact, which has come from 283 when the new governor took over till today. And our external debt is approximately $440 billion. That means RBI has to keep on buying the dollar to maintain a higher reserve. So somewhere we are close to our external debt. So no way I could see the rupee going strong, but definitely gradually around the year we could see an annual depreciation of about 4 to 5% should be there on the rupee.
I'm going to come back on that, where you see the rupee going. Sujan, let me ask you for an impact now, right? So the rupee is weaker. How does this impact the economy as including the obvious ones and maybe the not so obvious ones?
The obvious one is obviously the foreign trade. So as you know, the exports have done extremely badly, not only for the last year, actually if you see for the last 3 years it hasn't done well. So this should be slightly positive on that side. And not only for the goods, even if you see the services, particularly ITS services, this is obviously going to be positive. But having said that, as Mr. Dev was pointing out, if you look at about the $40 billion of external debt, about 85% of that are corporate debt.
Right.
So given that, so overall corporate debt, which is pretty close to $75 billion kind of a number, the depreciation of rupee actually increases the cost of funding.
Which faces a further strain in addition to the strain that they're already facing thanks to interest rates and so on.
Yeah, absolutely.
Yeah. And or maybe on the operational side, yeah.
And the real catch-22 situation which is happening is the cost of hedging is very high. So even if the corporate wants to hedge this kind of risk, the cost of hedging itself is so high. Right. So if you take Mr. Dev's position that rupee will be depreciating by 3 to 5%, and if the cost of hedging is above that, so in many cases it makes more sense people to keep it open rather than hedge it.
Right. So what about imports? I mean oil being a key one. What's the kind of impact are you seeing at this point, and what could it be?
See, now the point is that there is in some sense the weakness of oil or any other commodities which you had seen is because the dollar was strengthening. So in dollar terms, the oil prices are falling. And India is the country where the share of oil imports to total imports is the highest. So if the oil prices go up, even if not in dollar terms but in rupee terms, obviously that will have an impact. That will have an impact more on the now with the decontrol of diesel. This will have more of an impact on inflation side.
Right.
And
yeah,
also
because you're looking at both going up, right? Oil prices are going up and the rupee going down against the dollar. So it's a potentially dangerous.
Yeah, it is absolutely.
Though we're not at the levels which we were at earlier. Yeah.
Absolutely true. And also, if you see the current, if you see the international oil crude prices at this level, even in rupee terms, and the retail price of oil products, they are substantially higher than what it was at the comparable level last time. So government has government has increased taxes on the crude and oil products. So government has quite a bit of cushion to soften this blow if the need really arises.
Okay, Mr. Dey, last word. So what's your prognosis for medium term and let's say for the rest of the year as far as the rupee goes?
Well, it's extremely difficult going to see where the rupee goes. Even tomorrow is very difficult to predict. But having said that, I honestly believe that maybe this first quarter, maybe till June or July, we could see the rupee in the range up to from 63.50 to 64.50, 65, and going down the year, maybe in the last quarter when real rate hikes will come. Possibly we could see the rupee close to around 65 to 66 levels.
I mean, trend of depreciation, which is what you pointed out earlier as well, that you don't see it strengthening for sure, at least from your point of view.
No, as long as we are a trade deficit country, that is strengthening of the rupee is ruled out. You may get 1 or 2 days, a few corrections here or there, but no way strengthening of the rupee.
Right. Okay. Right. Sujan, last word.
I also think the path of least resistance for India is rupee to depreciate. I'll change this view only when there is a pickup in the capex cycle, because if there is a pickup in the capex cycle, in that scenario, and if you look at the past history of India also, when India is in a high growth phase, when
and there's money coming in,
so
we come back to the first point in some ways. If the capital flows change direction and substantially so, that could obviously influence the fate of the rupee.
Absolutely.
Right. We've run out of time. Thank you, Sujan. Thank you, Mr. Dey. We've run out of time on Policy Watch. That's all we have this week. We'll be back next week, same time. Thanks for watching.